Federal Reserve cutting interest rates by a quarter point as expected to a new range of 4 to 4.25%. New Fed governor and former CEO, current CEA chair Stephen Myron dissenting in favor of 50 basis point cut. The median Fed official looking for 2 more rate cuts this year, but just barely. I'll get you details on that in a second. The statement importantly says the balance of risks have shifted. Downside risk to employment has risen. Job gains have slowed. Unemployment has edged up. And economic activity has moderated. At the same time, the statement does note that inflation has moved up and remains somewhat elevated, but clearly the Fed favoring the concern about employment here over the concern about inflation. It says uncertainty remains elevated as well. On the rate outlook and the so-called dot plot, some really interesting movements here. As I said, the median Fed official forecasting 2 more rate cuts this year, but just barely. There was massive disagreements among officials on the rate outlook for 2025. Very unusual with just 2 more meetings remaining. Let me give you the data here. One official doesn't want to cut at all. There was no other dissent in favor of not cutting today, but one wrote down the current rate or the previous rate as their dot. 6 want no more cuts after this one. 9 want 2 more cuts. And one official, I guess we can guess who it is, wants 5 more quarter-point cuts this year, or 125 basis points, to bring in the Fed funds rate down below the median neutral rate. So there's a big-time dove on the committee. I think the committee at the headquarters there will have some fun figuring out who exactly that is. The median wants 1 cut in 27 and 1 in 28. So I'll give you the numbers now. 3.6 is the median forecast for this year on the funds rate, down from the current of 4.125. So that's 2 cuts. 3.4 for 27 and 3.1 for 2028. A little bit more on the economic outlook. Core inflation unchanged. The outlook for this year at 3%. Unemployment unchanged at 4.5%. GDP pushed up a little bit to 1.6 from 1.4. 5 members want to go below the 3% neutral rate in 2026. That's up from 2 in September. So they're looking for a little bit of stimulus down the road next year in the funds rate. 6 want to do so by 2027. Brian, I'll send it back to you and the smart people around the table there to make sense of all this.